Fidelity: How to buy fractional shares. ProFund's Ultra Bull Fund INV seeks daily investment results that correspond previous to fees and expenses to 200% of the performance of the S&P 500 index. It was incepted in November 1997. The fund uses a leverage to seek to double the daily performance of the benchmark index. Leverage is borrowing money or using credit to potentially earn higher returns. But along with the potential for higher returns, leverage also increases the risk of an investment. This aggressive growth fund ordinarily invests a substantial portion of its assets in stock index futures contracts, options on stock index futures contracts, and options on securities and stock indexes. It may also invest in securities that are expected to track the S&P 500. Howard S. Rubin has been lead manager of the fund since December 2009. Rubin is a chartered financial analyst and has been a senior portfolio manager with ProFund Advisors since November 2004. Stonebridge Small Cap Growth was incepted in October 1956. The aggressive growth fund seeks long-term growth of capital and short-term income as a secondary objective. This aggressive growth fund invests primarily in common stocks that appear to have good prospects for superior earnings growth, and investing in companies with smaller market capitalizations based on the total value of publicly traded equity securities. It selects stocks through careful analysis and intensive study of several industries and companies. Matthew W. Markotis has been lead manager of the fund since February 2003. Before joining Stonebridge in 2000, Markotis was a portfolio manager and analyst of separate account equity portfolios at Van Deventer and Hodge Investment Counsel. The fund invests in equities of public companies with above-average prospective growth rates. While focusing on capital appreciation, it also seeks tax efficiency and lower risk exposure through the use of hedging instruments such as short selling. The aggressive growth fund normally invests at least 65% of total assets in equity securities of domestic issuers. Although it may invest in companies of all sizes, its investment strategy may often lead it to invest in smaller companies. The fund is non-diversified. Shareholders have to make a minimum initial investment of $5,000 to enter this Zacks 1 rank fund. It has an expense ratio of 2.50%. Bernard Lirala has been lead manager of this aggressive growth fund since January 2008. Lirala has an MBA from Harvard Business School and also co-manages the Needham Growth Fund. Learn more about the new Zacks Mutual Fund rank and detect some of the best market-beating mutual funds by browsing our mutual funds section. This part of Zacks.com offers a variety of tools including mutual fund research, a new mutual fund screener, helpful answers to frequently asked questions, and quick access to prospectuses and other information. By applying the Zacks rank to mutual funds, investors can hit upon funds that not only outpaced the market in the past but are also anticipated to outperform going forward.